It was a good day on the stock market today, despite a mix of results for investors to ruminate over. Earlier I spoke with John Milroy from Macquarie Private Wealth. John Milroy, I see the local market has gone its own way again, a decent rally despite a slide on Wall Street.
Yes, good evening, Ticky. Certainly shrugged off those sluggish comments and sluggish performance from the overnight markets and the lukewarm reception to the French and German comments as well around potential changes there. So positive to see. Banks certainly a lot brighter here as well, of course, and although the results today are a little mixed, markets generally took that pretty positively. Seemed also some returns of some of those overseas buyers here helping us along as well.
Let's go to some of those mixed results. Blood products maker CSL has disappointed the market with its results. What are your thoughts on its plans for a new manufacturing plant in Victoria?
Yeah, well, certainly the result, as you say, was a little disappointing, down 11% on the previous period. Anything that is going to add to their business, and of course those new jobs are welcome amongst the general environment of other groups suggesting that they'll be cutting jobs here as well. Certainly the bearing division went very well. Gardasil a little softer and some royalties falling there also. Finished a little softer, down around 29.07 at the end of the day.
The reject shop suffered a 31% slump in its profit. It was a casualty of the Queensland floods, of course. What did the market make of it?
Well, it ended up being pretty much steady on the day. It finished around 10.07 or so, and you're quite right, those impacts on the distribution centre in Queensland certainly did hurt them. Although a bit of a bright spot was the opening of 23 stores this year, of course, and the company is reporting that they're trading above the group average. So some good news amongst all of that difficulty they're facing, and although they're also suggesting the retail environment remains pretty challenging as well.
Now, the big bird Qantas has again warned the wrath of politicians today. Has it also warned the wrath of investors?
Well, no, a bit of a brighter day for them today. They've finished up nearly 3% as well, as Alan Joyce goes through and talks about the challenges facing the business and reiterating the strategy that they're going to undertake with reducing that capex around the A380s and, of course, the launch of the Asian-based short-haul carrier.
Yeah, he's been pretty consistent with his message, hasn't he?
Oh, absolutely. You know, they're certainly in the first phase of that 5-year turnaround, and markets probably a little impatient sometimes, as that was witnessed yesterday. Really, that, of course, is obviously a 5-year turnaround, going to take some time to come to fruition, and really time will tell. Market, as I say, a bit kinder to them at the end of the day.
John Milroy, thank you very much for joining us today.
My pleasure.